Hi, my name's Justin Reid. I'm the CEO of Troilus Gold. We are developing a large copper gold asset in central Quebec.
Justin, good to see you. So I thought I'd reach out, put some drill results out. Higher than normal numbers, 2.44% grams per ton over 56 meters. Does that change much?
I don't think so. You know what? It improves confidence at the end of the day. The J and 87 zones, which were historically produced and operated, were drilled at 65-meter spacings. The southwest, where these results came from, is a brand new deposit, and it's a brand new deposit that's going into production first. So we decided to de-risk it even further by drilling it off at 30-meter spacings and increase the level of confidence. And our higher grades there became higher actually than we expected. The higher grade is larger than we thought, and the impact is the first 1 to 5 years of mining, right? So higher level of confidence. We're going to talk about funding shortly. When you're putting the amount of debt that we are onto this project, our lenders and our shareholders want certainty of cash flow. And what this does is just gives us higher certainty. So great grades, highest grades ever on the property, opportunities for higher grade early, but holistically, regionally, it's not going to change the entire grade of the mine. It's going to have an impact on the first few years.
Right. Okay. Nail on the head. I kind of want to get to the debt bit, but so what we're saying is it doesn't change much in terms of you're not going to update block model or mine sequencing or metallurgical adjustments or design changes in here. This is just all about the certainty it gives you, and I guess the market that there might be a little bit more there than meets the eye.
Yeah, there's not going to be design changes, but there will be some sequencing adjustments or optimizations because of this, and we'll get that out as the detailed engineering goes. But everything's moving in the right direction.
Right. Okay. So all good news. We talked about this last time, Matt, which is around the $700 million syndicated debt package. You kind of announced that the financing mandate was, I think, it was SOCGEN, KfW, EDC, etc. And can you give us an update on how things are progressing with the due diligence?
Sure. You can imagine in $1 billion Canadian, 700 million US. There's a huge amount of work, big teams. There is probably 55, 60 people working on this. KfW is leading all of our environmental and social equator principle due diligence. SOCGEN through SLR is leading all of our technical DD. EDC is taking care of the documentation. So we're probably halfway through. Over the next couple of weeks, we have incredibly large and numerous site visits because the snow is now gone or almost gone. And so all of the various contractors employed by our debt syndicate are on site doing the hands-on work. So things are progressing very, very well.
Okay, and obviously, once that, okay, where are you sort of with in terms of technical ESG or commercial milestones that are yet to be completed, and which ones of those components are on a kind of critical path are being rushed through?
Yeah. I think a lot of, because we're dealing with the export credit agencies, which are, their capital is backing offtake agreements. Offtake agreements with the smelters through Boliden and Arubis in Germany, Sweden, and Finland are a critical path. Negotiations are going very well, and we hope to have completion in the next 3 to 4 weeks. And I think that will be a major catalyst for the market, and it'll be a major catalyst that says, hey, this debt as it's structured now is moving forward because we're signing the agreements to absolutely deliver the con. So that's a critical path. We have Ocean Partners working with us as our advisors because what do we know about the concentrate market except that we make it? So we have external experts out of London helping us, and to use a baseball analogy, we're rounding third. So we're in really good shape.
Okay, and in terms of the kind of offtake agreements, are they a precondition for financial close? And if so, can you sort of elaborate on maybe the scope and the structure that is being considered, or will that not happen until, I guess, this diligence is finished?
Well, it's kind of a double-edged sword, right? We're not going to get the capital. We're not going to have financial completion until the DD is done and the offtakes are signed. At the same time, we're not going to. We need to have the offtake agreements aligned with our financial goals for us to continue with the debt. And so, what I would say at the end of the day is everybody is completely aligned. The copper concentrate market is as starved as ever. And so, we're having all parties at the table acting very maturely and moving forward. So, I think we're going to have a great deal for both sides. And we should have it done. I didn't want to sound like Donald Trump there, but I think we're going to have a great deal finished very shortly, and we're spending a lot of time on this.
Okay. And do the LOIs integrate with the current MLA mandate? I mean,
100%. And
right.
then is the offtake agreements provide a huge amount of flexibility that other financing options don't have. From 2 points: security and also financial structure. If we sign an 8-year offtake agreement with Arubis or Boliden or whatever refiner, we can amortize that capital for 8 years. If we sign a 15-year deal, we can amortize it for 15 years. So financially within the model gives us a huge amount of flexibility. Then on the other side, the structural side, this money is backed by export credit agencies, right? If you hit a hurdle or a delay during commissioning, which all mines do, unlike other lenders, you do not see export credit agencies send their workout team to your office on day one saying, we have to reprice this deal, or we are taking your asset. Export credit agencies really are there to make sure that concentrate is delivered to their country. And so as such, we're seeing a lot of financial flexibility, which is taking into account everything that happens in mining. So from that standpoint, really great deal. Couldn't be happier.
So they what effectively are they backstopping the commercial risk?
Yeah,
in a sense, right? Okay.
So the money actually comes from our MLAs, our mandated lead arrangement. Yeah. KfW, SOCGEN, and Export Development Canada, they lend us the money.
Yeah.
But the export credit agencies guarantee up to 90% of that on materials, and on 95% if we buy equipment. So whether it comes equipment from Finland at Metso or FL Schmidt for the front end of the mill, or Liebherr from Germany for the fleet. 95% cover on equipment, 90% on critical minerals.
Okay, and I don't want to appear greedy here, because obviously protected in that sense to the downside, but on the upside, is any chance of enhancing the terms or increasing the kind of total finance capacity beyond that 700 US?
It all depends on the commodity price used in the model at the time of signing.
Right.
So,
okay.
We are not able. Our MLAs are not modeling our coverage ratios at $3,200 gold. We are modeling our coverage ratios at 22 to 24, and as we see constructive appreciation of the gold price, we see those terms get better. So at the end of the day, we're going to agree on the model. We know what our base commodity price is, and we will adjust at the time of final signing.
So how did this deal come about? Because it's a real kind of breakaway moment for you guys, because I think you guys were, along with a lot of developers in Canada, just in waiting mode. Where did this plan come from? It's one of, it kind of feels like this success as my father's failure as an orphan is touch scenario, but this structure is unusual.
It is unusual. It's been done before, but we don't see it very much for the junior space or the mid-tier space. If we were a straight gold producer or precious metal producer, I don't know how a company of Troilus' size was going to fund that by ourselves without either bringing in a large partner a ridiculous hedge book of monster size, um, or or basically just sitting there and waiting to sell, right? We brought the team in, and we've talked about that before, but at the end of the day, it's all about copper concentrate. There are not a lot of copper concentrate producers in the junior market. There are no other copper concentrate producers in the next 3 years or 4 years in Eastern Canada. Cisco Metals will probably be right after us. It's a great deposit, but there are no other ones. So as such, with the closure of Cobre Panama and that's the sixth largest copper mine in the world, taking that concentrate off the market, the smelters were absolutely starved. And so we started to look at where's our con going to go. And our advisors, Ormet and us, we visited all of them. And we visited the export credit agencies who said, we can't have our smelters shut down. Fiscally and environmentally. And so as such, it was offered to us after negotiations, and it's an incredibly eloquent way. You break the back of a deal when you can bring $700 million of debt in. And this is sovereign debt. So this is low risk, low price debt. I can't release the terms, but let's just say it's less than 10%, well less than 10%. So you bring in sovereign debt, which is flexible. It makes everything else easier. So that capital stack that we're going to require, we will have financial completion by year end. And if we were talking a year and a half ago, I don't think we were there.
No. I think it was a very difficult time. As I say, so it was holding pattern going on. But you did announce that you were going to get into construction by beginning of 2027. Now, money's critical to all of this, but you also got to be moving things along the ground. So I think the next thing was sort of where was ESIA. Where are you with that?
We put out a press release. We've talked about the new system under Quebec as each chapter gets reviewed from the federal government, the CRE, and the province. So comments, concerns, criticisms, clarifications are all taken in. We make the adjustments, we address, and then we file. So we are down. I'm just looking at my calendar because I know the date. We're kind of 5 weeks, 6 weeks away from filing, and that starts the clock without any expedited. All the times we've laid out are based upon the status quo right now. And so that gets us in a position to be permitted by the middle of next year, breaking ground, like we said, the end of next year, early 2027, most likely. There's been a lot of commentary, rhetoric, you use the term you want, from all of the political parties in Canada about expediting the timeline to production for industrial complexes that have impact, of which we're one. And we're seeing incredibly positive engagements from both the federal government, the opposition, and at the provincial level as well. So things are politically as good as they've ever been for us. So the filing of that ESIA and our closure plan, they're filed at the exact same time, are two significant events for us. And the offtake agreements. And, you're going to see all those things in like the next six to 8 weeks.
Okay, interesting. I mean, Carney's a crushing victory, and hopefully things. He does what he says. That'd be nice to speed things up. I think they were talking about during the elections, but it was already good before. But if they can make it easier, it'd be great. And the CRE, you've got their support as well. I noticed.
Yeah, the CRE have always been supportive. I mean, at Troilus, and I guess everybody says that, but our impact benefit agreement, the first one signed out of the James Bay Accord was Troilus when Inmet was operating, and Mississippi, and it was 14 years of success. And it was the one from which all others were based and grown on. We have 3 large contracts with the CRE right now. They are partners in drilling, so almost 400,000 meters of drilling they've benefited from and had people trained and worked with us. They run our camp and our site services for us as well through a JV with with SCAN, which is the economic development wing of the Mistissini Cree, and our dewatering, which is well underway. The J pit is nearing completion, is done with our Cree partners as well. So 25% of our employment is Cree. So again, we've done all of those things. So as we finalize the IBA, which is a major gating item for final permitting, we're kind of ahead of the game, I think. So
okay, one project, one review. Let's see how that works. In terms of other things, other types of permitting or final engineering or financing or things like that, because you kind of got the process plant and infrastructure design, which is not complete, as I understand it. Are there any kind of anticipated changes or work to do around the feasibility study?
Yeah, I mean, a feasibility is a moment in time, right?
Yeah.
Here is what our mine looks like at plus or minus 30% today. Commodity prices of the day are backward looking. So we engaged BBA out of Montreal. We got the A team, which was absolutely key for us. The team that did Malartic, the team that did Detour, that's the team that's doing us. We signed an EPCM agreement with them, and we are well advanced on the basic and detailed engineering. So the first step is to look at a deep review of your feasibility study and look at potential trade-offs. And we identified three major trade-offs: front end crushing, the leach circuit, and the building sizes. And we are finalizing those. We'll put that out to the market as they come in. What you'll see is that we're going to see very little impact to capital, which is key in this market. And we're going to see a lot more flexibility and optionality. So I can't really talk about it because we haven't finalized them, but we're making a very, very good circuit better by incorporating real-time examples from existing mines and taking a little bit of the hypothetical away. So again, it's kind of like the drilling we talked about at the beginning of this interview. It's simply about de-risking the process, right? We de-risked the resource at Southwest our first 5 years, which is the most critical, and we're going to de-risk the front end of the mill, which again is about pushing tons and getting the gold and copper. So
okay, so can I give kind of retail, like say, I think your shareholders and others looking at development companies in Canada have been sitting around when will these things ever get into production? Will they ever get financed? Will they ever get permissions and all that sort of stuff? 2027, beginning of 2027, not that far away actually, but in terms of things to look at, and I won't go into all this kind of critical path dependency stuff, but more about the kind of construction risk mitigation. Do you think you'll be allowed to do any kind of early works program in 2026 to kind of de-risk the site preparation, or will that not be allowed?
it's underway now.
Right. Okay. So what does that look like?
So we have
visually.
These are all things that are in capital. They're in the actual capex. So we will take out of the capex and do now. They're being permitted under exploration permits because we're allowed to. We have an existing mining lease that we are amending as part of this system. So we want to take a very large bulk sample from some of the ore that's going to be mined very early on. There is a waste pile over top of this bulk sample. So we are currently permitting to move one of our waste piles over kind of the course of the next 10 months to get to that bulk sample. One of our largest items in our capital is actually moving these waste piles. It's part of our pre-strip. So we're going to be able to do that. We're also bringing it into a Cree training and heavy operator training school at the same time. So we're going to accomplish a whole bunch of things, eliminate a bunch of capital early on, and expedite the timeline. We have to move a road. Luckily, we're doing some exploration drilling this summer that requires a road, so we can start the early path of that road. And we're seeing if we can move the power line. We need to move the power line a few hundred meters, so we're seeing if we can do that right now, and I think we might be able to. So we're looking at all opportunities in your year -1, -2 that we can take out and do now, and we'll have the capital to do it as well. We're sitting with about $20 million in cash. our stock has performed great. We have over $17 million in the money warrants. And you remember 70% of our ownership is institutional. And so we have a great relationship with them. We have, they've been very pragmatic in everything we've done. And we know for a fact that if we ask them to exercise those, they will. And you'll see a few other things from us. So at the end of the day, we're not coming to the market for equity anytime soon. We have the cash we need to do all of these things, and we're on the critical path. So,
okay, so
you
got a plan, got the money, etc. But in terms of like that money, I assume covers, like say, things like the infrastructure build out and moving things around, and long lead item procurement, etc. What about people though? That's got to be the hard bit.
It is, but we've made huge advances, and you know what? You can't skimp on people, because not only do you have to have the right people to actually execute it, you have to have the right people to give the lenders confidence. It's all about execution now. Execution risk for the lenders. Troilus is not a technical risk to our lenders, right? This mine operated profitably for 14 years, right? There is limited technical risk. Your risk is commodity price, but it's not. I don't see that impacting us right now. So we don't have a lot to prove technically. It's about who's going to do it and how good are they. So we did something, and we've talked about this before, but we brought in our full operations team and our full project development team at the exact same time. And this was something Troilus has been missing for years because we were so focused on exploring and building this resource base. So we brought in as our VP operations and general managers Andy Fortin. And we should have Andy on sometime. Andy was at Troilus originally. He built Meadowbank. He was part of the Eleanor build team. He has huge Quebec expertise, and his team has joined him. So our whole operational team, the team that is going to run this from day one, is in place. We brought in Denny Rivard. Denny Rivard was responsible for a lot of the construction of the Quebec aluminum smelters. He built the largest in the world in Mozambique. He's done countless mines around the world. And we've just hired him and his team from the Case Infrastructure Fund in Montreal. So the Case Infrastructure Fund, or Case, is one of our largest shareholders already. He just completed on time and on budget the REM rail line in Quebec from Montreal to South Shore. So it's Canada's first autonomous rail line, $8 billion project. He hit it out of the park, and he joined us to take us through detailed engineering, construction, and then give the keys to Andy. So, when your largest shareholder is where one of them is the Case, and we get the pension fund's entire engineering team to come do it for us, we're checking a lot of boxes. And I can tell you that our lenders are incredibly happy with the people we have. So that's a big gap that we've closed over the last few months, is who's going to do this? Well, we've got the best team to do it, and they're working with the best detailed engineering firm at BBA, who's done it before. So those are big changes.
No, big changes at board level and experienced as well. What about sort of dropping down a level in terms of local employment, training, etc.? You mentioned the CRE earlier. What's the expectation, sort of district-wide, about employment from you guys?
Yeah, underway. So we're working with the municipality in Chibougamau and Mistissini now on putting in. Well, first of all, it's a mining center. And the majority of the local employees or working in the mining industry leave the town, leave their families to go to mines, fly in, fly out, up in the Yukon Northwest Territories or Val-d'Or, but they're away from home. Troilus is an hour and a half from Chibougamau. So we are already seeing a large request or influx of provincial and national labor to come home, which is great. And most of them worked at Troilus originally. So it's not like we're reinventing the wheel, it's what they know. which is great, and their family knows. We're working with the municipalities to put in programs to promote and bring in new people. And when your mine is so close, we can do things, administration of a mine is a big part of it, not just the physical labor. We're going to be able to run the whole mine's administration out of the town rather than at the mine. So that means your accountants, your administrators don't have to go to the mine on a shift. They can go home every night. And so there's a lot of things we're putting in place. We're also working with the government or the local municipal government on putting in opportunities for mortgage sharing and things like that. So we're really not too concerned about it right now, because we are a year or so away from building. Then we have a 2-year build where it's going to be 1,400 contractors. So that's giving us 3 years to have the full operational team in place. And you typically find a lot of those contractors stay. So we have a good plan in place, but it is an absolute critical path and a good point to bring up that.
I think it's absolutely essential part of this one, because I think it's the team's ability to deliver and execute that is the difference between success and failure quite often, because the money is a difficult part of the equation, but even when people get that, they do find ways to mess things up. So having the experience of the team that you brought in obviously makes a heck of a difference. I just want to go back to this point, because I think it's such a big deal. If I'm looking at your share price, since the beginning of this year, I think the market thinks it's a really big deal too. Is this kind of break away from the pack? If I asked you 2 years ago, do you think this thing's going to get built? I don't think you could honestly have answered me. I think it would have been a hope rather than to give certainty to it. I don't want to put words in your mouth, but I think it was a difficult time for everyone in that space. Like, when is this thing going to break? But you've done it where others haven't. How are you feeling about this thing getting built now?
There's no question it's getting built. I mean, there's no question. And it's not only the financing, because it's kind of funny. As your market cap goes up and the stronger your stock is, commodity price helps a lot. The easier the money comes, to tell you the truth. Things got a lot easier once we brought in the people, and it's just a confidence standpoint, right? You're right. A couple of years ago, there were times when you look around saying, man, we've got a great deposit. The engineering's moving forward. We're in the right jurisdiction, but the market's not moving. To how are we going to fund this mine as a $70 million company? It's almost impossible. Now we have the team in place and we're sitting at a $250 million company. It becomes a lot easier. And you start looking at our market cap compared to Malartic or the original Osisko or the original Detour before they got their permits. Well, our market cap's right in line with where they were. So we've talked about it for 5 years, just de-risking. Commodity price sure helps. Government focus sure helps. But our timing is spectacular, and we've made the right changes, I think. So
okay, Justin, appreciate it. So this is meant to be a quick one about good drill results. Turned into something bigger. Appreciate your time. Stay in touch. Let us know how you get on. Okay.
Thank you. See you in Quebec in a few weeks.